a break of structure, or a liquidity grab. How do you know which one is which, and how do you read that on a chart? That's exactly what we're going to do now on the Euro USD pair. So I'm on the 4-hour time frame, and what I'm going to do is go through to you and show you exactly how I do my analysis when we're looking at the break of structure and a liquidity grab, and how we look to trade the liquidity grab. So when we're looking at this 4-hour time frame, we can look at structures in different ways, but if we look at a longer term structure on this pair, we can identify that this market has been creating a higher low, higher high, higher low, higher high, higher low, and a higher high. And we also have this smaller area here on the way up where we create a liquidity grab, which I'll go through in a moment. So we can see that the main structure of this pair is bullish right now. Just remove those off. Now, if we go closer into this pair, we can also identify, okay, the market has made this last move to the upside. Now, before this, we created a liquidity grab here, and the market here, we just mark this out, is from this low to this high. That is our current trading range that this market is within. So the previous range was from this low to this high. That's all we do. We look at those ranges in the market. That was our previous range. Now, when we're looking for a buy trade with the trend, you need to be looking for anything below this 50% area, inside this area here, which we class as that discount area. Now, the best area is to start looking for trades or for the reversals out of these bottom zones. You can see the market went all the way down here into this last area of this zone. We then created this low, pushed up, broke structure, a new high, a higher low, continuation. That shows me that this market was making that reversal out of this zone. Now, if we go to the weekly in a moment, you'll see what this zone actually is. Now, the same thing here again. The market come up, made this swing high, and we start to pull back. And we really want to see the market pull back to this area for a trade. Now, we don't have to. We could also see the market reverse at this area. But to be honest, I'd like to see this area of liquidity here, these lows taken, push deeper into this area. Now, if we just remove everything here off the chart, if you're not sure, I just went through, you can rewind this video. Let's quickly go to a weekly time frame and we'll look at the weekly structure here. So the weekly has come from this low in the market. So we made this low here in the market. We broke this structure here to the upside, which placed this pair on a bullish bias. We went to this swing high. We actually had this low and this wick, which actually created an area where we expect the market to come back into. This wick to downside was a liquidity grab in itself. Hey traders, we'll get back to the video in just a moment, but I want to give you a gift for hanging out with me today. I want to give you a free trading strategy class and cheat sheet. This trading strategy class and cheat sheet will go through everything that you need to know about applying a supply and demand strategy that I personally use to generate profits. But it's more than just a strategy. You're going to have some actionable steps to accelerate your growth with learning how shifting your focus can generate you more profits and the steps to building a profitable strategy for yourself. You don't have to spend a lot of time on this. It's about doing the right things in the right order, and it's free as my gift to you. So just go to norfolkfxtrader.system.io free strategy class sign up, or hit the link above now to get your free trading strategy class and cheat sheet. Now back to the video. The market then has created a liquidity grab on a 4-hour time frame here, and we pushed up to then this previous high. We've wicked through this high, pulled back again into this area, which is another wick to downside, which you'll see if I just remove this quickly. Let's remove that here and here. You can see we have this wick here to downside we've pushed back into. That's an area of demand, and the market here then has pushed back up to break this structure, made this new high, and this becomes a new higher low, and we're pulling back. So looking at the weekly structure, what we can determine here is we're leaving over areas of demand. So you can see here, we had this wick to downside. That will be an area I'm expecting to see the market come back into a potential reversal. On lower time frame here, you'll be able to see there was a liquidity grab. So there was an area of a manipulation to downside. We'll go through exactly what was happening there. We then rallied up, broke structure. Okay, well, we broke this high, and we pushed through. Was a liquidity grab through above these highs, and again here. That created a reversal where we can see a lower time frame. We start looking for the break of structure. The market pulls back down and comes back into this area of demand created here, okay, on a weekly time frame of this wick. Now you could just use the wick or the body. You can see the market's pulled back into the area. I like to use the body as well. The market's pulled back in, made this high low, and we've pushed up. And now we've actually broken structure at this swing high and at this swing high. And that's a clean break of structure. That's what we're looking for on a break of structure. We want to see a nice, clean push through the level like this. That's created a new high low here in the market, as well as this high low. That then gives me a new area of demand to look at. And we have this is an area of demand. Now, what we also have, as I can show you in a moment on a 4-hour, is this low, which is an area of liquidity. And I'd like to see this low here taken to fill an area here of imbalance and push the market down into this area. That's what I want to see happen next. So why did the market pull back here? Well, we came back into this high. See this swing high, pushed above it and closed back down. So there is a weekly trend is currently bullish to remove this level. If we now go to the 4-hour again, and let's have a look at where the market's pulled back in. So when we pull back into this area, there is your liquidity grab. We push down below this low. And the main thing we're looking for when we do come back into this area, and again, we'll use the simple tool to recognize the zone we're looking for. And we want to see the market come back into this zone here. Okay, so let's just mark this off. Get my pen. So we want to see the market come back into this zone here. Okay, on this move. There's that 50% area. So we want to see it pushing down into that discount area and then into this zone. Now this comes in line just about the same as that area of demand on the weekly. The market does push in. So once we're inside this zone, we stop looking for those sell trades and we wait to see if the structure reverses out of this area and gives us that break of structure on the lower time frame. So the weekly is the higher time frame and the 4-hour is our lower time frame here. We can see we actually make this low. We do push slightly lower and we break structure here to the upside. That's the first sign that this market is showing us a reversal out. Now we look for that higher low and a continuation. Now what actually happened is the market pushed down lower here, and that is that liquidity grab below that low, deeper into this zone, and then we push up and we break structure again here for a new high. Once we've seen this reversal out, then as we pull back, this higher low is your key area to start looking for those buy trades. And we're looking for continuation to take this high. And that's where the market does go to. So if we then go closer into here, this area on the market, where we wick down here in the market to remove this. And what that's pushing into there is in fact this area of demand. So we have an area of demand here we wick into, and we also have an area of imbalance here which has got to be filled. And we see that more in a moment. But this is a simple break of structure, pull back into this area of demand. The market then continues to push up. But as we push up, we expect the market to want to take this high. Now, that doesn't happen here. And we fall back away. Now, what's it doing? The market, at this point, we know we're looking for buys only. And where are we looking to buys to? This high in the market. And what's happening is the market's pushing below this low. So we are a liquidity grab. We don't have to see a wick for liquidity grab. We can just see it with a push through. Now that's pushing through, making a new low in the market. And what we're actually doing here is filling this imbalance. We have an area of leftover imbalance here and another area just above it. So a small area of imbalance there as well. The market pushes down into that imbalance. Now, if we went up a time frame here to a daily, and we would look at daily at this point, and you can see that the market is pushing down here below this low into these areas I just showed you on a 4-hour. What's this wick doing? That's your liquidity grab wick. And we can also identify it's pushing into this area of imbalance. So the imbalance is where those orders are sitting. That's where the liquidity is going to be pushed down into. And it's pushed down, then leaves this wick behind for the market to pull back into. So there's our break of structure there, and I pull back into that wick. We go back to a 4-hour. Once you start combining all of this together, it's going to help you to understand the areas where we see the break of structure and where we see the liquidity grab. So we pull back into an area of what? We have an area here of imbalance as well as that wick on that daily time frame. The market also pushes below these lows. Okay, we know we're bullish still at this point. We push down below these lows. We break through. This is not a break of structure. This is just the liquidity grab. Our break of structure is above these swing highs. Remember, this is a higher high. This is a higher high. There's your break of structure. There's your break of structure. You're going to see the break of structure happen with momentum candles. There's a momentum candle. There is your momentum candles. So this is a liquidity grab below this low to pick up those orders inside this imbalance and that wick on that daily time frame. So the market pushes up, breaks structure, and again creates this high. Again, this is where we're looking for the break of structure. Now, we'll see in a moment where we see a liquidity grab at the high of the move and we see a reversal. So if we continue with that structure, we can identify this is our swing high, our higher high, okay, a new higher low. We did have this high here created as we broke up here as well. Market pulls back in and we continue up with a new higher high. And then we pull back again and there's a new higher low. So again, where's this area pulling back to? This is pulling back into this area here. This is an area of potential demand. So we pull back into that demand zone. And if we look at what's happened, what's the market done here? We pushed below a swing low, a liquidity grab into an area of imbalance as well. Now we did push through that imbalance deeper into this area of demand. And then the market is pushed back up to take this swing high. Now we've actually manipulated through that high this time. So on a lower time frame here, same thing. We've just dropped down here to a 30-minute. Let's just quickly go down this here on a 30-minute so you can see exactly what we would look for. Just find that area quickly. So when the market pushes down into this area, what you look for is a reversal out using the break of structure. So when we see the market coming down here, what are we witnessing again? We're seeing the market pushing down below these lows, okay, into areas here below of imbalance and a demand zone. And then we're looking for that reversal out. So we have this swing low. This is our last high. But the market creates what we call this smaller high, so lower high, but it fails to break structure low, which shows me the continuation in that trend did not happen. We continued up, okay, to make this high. We then pull back, we break through this low. This is our liquidity grab, lower, pushing lower, okay, before we see a new higher low to continue up, back up to take this high here. So we just reverse all that off. Where was you looking for an entry here? Let's move this line quickly. Hang on, let's grab that. Yeah, so we'll get rid of this. So when we see the market coming down here, again, we can use a structure from this high to low. where we expect to see a reversal out of this area. Where do we see a reversal out of that area? Now, looking at that as a reversal area, again, look, if we look at this as our area we're looking for a buy, where did the market come back to? That's where it came back to for that buy. Now, if I just go back out, there's your push back up to take this high. Now, you could wait for that reversal for the break of structure. So you could wait for the market to go up, okay, makes this high, higher low. Now it just wicks through again into this zone here we've drawn. We then come back, higher low again. Again, this is another push down, liquidity grab, closer in, into this area of imbalance. Push below a low, liquidity grab, and then you're going to see that continuation. So a new higher low, break of structure, push down. This wick is pushing below this low. Okay, liquidity grab again, pushes up, breaks through the structure. A new higher low is formed. Again, even here, this small liquidity grab, these lows, another liquidity grab before we see the push up to take the highs. And there's your move up. That's how you can look at a different approach using the liquidity in the market. Understanding that liquidity grabs are pushing down below the swing lows and highs into imbalances or areas of supply and demand. Let's just remove all of this. That's all gone. Get rid of that. So that's that area. Let's go back to the 4 hour. So that's how we read the market. Now when we get to this swing high, this video is going to go on for a little bit longer than I normally like to do, but let's have a look at this quickly. We'll get to this swing high here. Make this swing high. Okay, there's our pushed upside. This is our last low. The market does push down. There's a break of structure. Pulls back. Okay, liquidity grab above these highs into this area of this wick. Now, we can also look at this simply. Let's just take all this off. By using our tool from high to low, that's the move down. Okay, broke structure. Where would we look for the market to come back into? This zone for a potential reversal. And then the market pushes down. And this is then your low for that push up. There's our break of structure again. So once we've broken through, we're now in that downwards move. We know we're going against where? This move here, from this low to this high. So once we start looking for sells here, we know we can move all the way down and sell the market to this zone here. So you've got all this movement you can sell to the downside. Okay, that's all we got to understand. And when we're looking on the way down, liquidity grabs, where are those liquidity grabs? There's one. Okay, manipulation through for liquidity. What are we looking for here? Areas of imbalances and areas of supply. Push down again. We do have a small, but not as good as this area. We continue down. We have one more push up here above a swing high and the last push down. Now we did test it already, but what happened here, the market failed to break structure. One more push down below a low here, and there's your break of structure here and here. That puts us now into a bullish bias. So again, we reassess. That means we're looking to trade against this trading range, which tells me we're not looking for any potential reversals until we get to this zone. We're expecting the market to break structure here, okay? But this zone could push the market back down, and that's what happened. We had this reversal here in the market of this high. So what are we seeing? We're seeing, again, another push up for liquidity above this high into this area here of imbalance. We then push down. That is a valid reversal out of this area. That is a break of structure. The market pulls back up, creates this lower high, and breaks structure again for this low. So what do we do at this point? We would then check to see the trading range we are in. So again, we go to our tool. This is really the push up in the market from where we see the market coming down, higher highs, higher lows. So this is our push up. Okay, this one was broken. So we can check it by using this. In fact, let's get rid of the larger one. So again, what do we see? From this swing low, we have a high, higher low, higher high. This was broken to downside and it's a valid break of structure. But then we have this zone here. And look what the market did. Once in, push up. A lower low breaks through this low, deeper into this area, pushes up again, lower high each time. We push down again, manipulate through this low again into the same zone, and then we break structure. As soon as we see this break structure, any pullbacks, we can go long and we can target this high for our first target. Now, this may seem complex to you, what I'm showing you, but once it's broken down, it is very simple. So let's just remove all of this now. And we'll go through quickly to identify how we look at this move in the market. I'll go through this step by step this time. So we have, and we don't even need to go to higher time frame at the moment. We know this is a swing low to this high. So we know at any reversals that we get now from here, that's a break of structure here to downside. Okay, pull back into this area here of supply, continuation. Once we see this, we know we can sell until we get to this zone. And that comes back here. We have a push up, okay, a push above this high, equal high here. We push back down again into it. We make a higher low there. We push back up, another manipulation through, okay, into where? Imbalance, sitting above. And then we push deeper again into this zone. So at the moment, we don't have any reversal out of this area because we need to see the market breaking structure. So we never broke through this high. We only went for liquidity grab above those highs into this area of imbalance. So you could sell here down to these lows again. But once we get to these lows, this is going to be classed as a liquidity grab through these lows until we break through this area and go through this area of liquidity. I still want to see a push below these lows perhaps and look for a lower high, another push down. That then gives you a reason to sell here again to target the low. We're in a bearish movement still in this market. Now on the way down here, we're selling, okay? We know we've got movement to sell. And let's just actually draw this again. Got movement to sell to this area. So anything down to here, okay, we can sell to. Why? Because we're looking for a buy when we get there. So the market comes down. We break this structure. After we already broke this structure here. And the market came back into this area here of the supply. Push back down. We can look at this on lower time frame in a moment. The market then pushes down. Okay, we make a lower high. We break this structure here. New lower high. What happens? The market pushes down. Pulls back up. Why would we look to buy here? Okay, we're only looking for a sell. And this gives you a perfect opportunity on a lower time frame. The manipulation, as we class that as, or a liquidity grab. And what does it grab into? This area of imbalance above those highs. So when we're looking for liquidity grab, you want to be looking for a reason. Okay, so that's a great area for sell down to where? This zone. Okay, the market's going to go there. Again, we pull back up and all we have to do is mark this out. So we've got this swing high to this low. We push down. We then create this new lower high to this low. Where did the market come into? It came into this area Again, this zone, grab that. This zone, it held at that zone. We just manipulate through the top, push down. And that's all you got to look at. And the last area, even here, okay, when we look at this swing high, we go to this low. And then we put in, sorry, it was this low. Then we put in this low and we went lower. So we broke structure from this high. Where's the market come back into every time? Into our zone here. And we pushed above a high, and that's our sell. Down we go for the lows. Because why? Because we know we're inside this range. It's all about the ranges you are within. So if we do now, and let's bring this back, we do now break through on this pair to downside. I like to see the market go all the way down here to this range, this trading range here. We're in, push all the way down to this zone. That's when we're going to start looking for any buys. In fact, let's just change this to a bullish zone. So if we now can watch the market here, we are putting in a new low. We've just done what? Broke structure. So we can start potentially expecting the market to want to take this low. This will be the first area we look for the market to go to now. So we're looking at this range to downside once again. There's our trading range. So where are we looking for those sells? Anything in here. What do we have on the way up there? We have a swing high. We have a small area of imbalance above. So that's where I want to see the market now potentially pull back into. And then we look for another sell down to take this range low. This is an area of liquidity, and this is where you'll see a liquidity grab through this low into this zone here. Then once we get in there, and only then, once we push down into here, okay, we can start looking for that reversal, okay, where we see the higher low formed and a continuation. Then we're in a new trend to the upside, just like we saw over here when we came out, okay, from this area. You see the market, we push down, lower, break the structure, higher low, continuation. That is your formation you're looking for. Move that, you'll see that better. So just like I've just drawn here, it's what we actually put in here. That's all it is, and that's coming out of the weekly area. And again, you don't even need to go to the weekly time frame. You can just draw this and you'll get your zone where you want to see the market coming into. Now, does it have to come down to there? No, of course it doesn't. We can see the market reverse from anywhere, but this gives you your best zone to trade from. That's what you're always looking for, is those best areas. Can't actually get this to pick up. There we go. And again, we can just draw it here again. Let's get this in the right place. And that's your new zone where we're looking for the market to come to. Anything inside this area. Now you can fine tune these zones with areas of supply and demand, areas of imbalances. And once again, from this swing low here to this height, we can draw our zone. Now we can see we overlap this time on those zones. And then if we then look at what happened here, the market actually did put in from this area here, this push up, but we failed to come back to this zone. But if you look at it as a zone as well, you can see this is a push up here. Okay, we failed to come back. It doesn't always come back, but we can also use this high and we can use this low as a zone from this push up. So this was a push up, push up, push up, and then you can mark it off as this low. Where did the market come to? It came to that zone. Again, you can fine tune all this. And we're also seeing we've got a manipulation for this low and this swing low here into this imbalance left over. The same here, we have this push up. Where's the zone? We can draw it here. And where did the market just put that liquidity grab into this zone? Now, this one we don't have a pullback into. Again, we can see this is a push up, and we can see the market came back to that zone. And we can do this over and over on the charts. That we have another one here, break of structure, this minor break of structure here. We didn't come back into the zone. If we use it as a bigger swing here to the upside, where did the market come back to? It comes back to this zone. So if you understood what's happening on the market here, we see that we have a break of structure here. Anyway, to the upside, we pull back to the zone. Okay, we have another break of structure, a larger break of structure here. We mark this one out. This is your larger break of structure. Remember, that was an internal break of structure. And we mark out the larger zone. Then you have this as your zone. And you can see the market came back again. Break structure there. We came back into that zone, push up, okay, came back into this zone here as well. So we can actually remove this smaller zone. We came back into that zone, which is also a wick left over here. Remember, these liquidity wicks push down below this low, take this low. That wick is an area of liquidity in itself, push up, and we come back into there to fill those orders, and we push back away. Look how simple this is, marking those areas. And the market continues to go up. And like I said, we have this current larger swing up. But if we mark out our current swing here to the upside, and we mark that one out, where do we now sit inside an area right now? So what do we look for? Again, like I said, I'd like to see it come back to the larger zone for this full swing. But if we want to see a entry out of here, we've got to see that push up, and we're going to see a break of structure. Then again, we can look for that move out, look for that zone we want to come back to, and then basically we're looking for that pullback and a continuation. So very simple once you look at it like that. So this is exactly how I do it. But if you want to learn more on a 2-time frame approach and how I do that in my own trading, then check out the free trading strategy class right now.